Hey crypto fam, ever wondered how those new crypto financial products like ETNs and ETFs are taxed differently? It's not just about what you buy, it's about the structure and where you live. With big players like BNP Paribas launching crypto ETNs, understanding the tax implications is more important than ever, especially for us European investors. In this video, we're diving deep into the key tax differences between crypto ETNs and ETFs for the 2026 tax year, focusing on Germany, France, and the UK. You'll learn why a small structural difference can mean a huge tax bill and how to navigate these rules. Let's get into it. Okay, so here's the deal. An ETN, or exchange traded note, is basically a debt instrument. When you buy a crypto ETN, you're not actually buying Bitcoin or Ethereum. Nope, you're buying an unsecured promise from a bank, like BNP Paribas, to pay you a return linked to the crypto's price. Think of it as an IOU from the bank. If that bank goes belly up, you're an unsecured creditor, and you could lose everything, even if Bitcoin is still flying high. Pretty wild, right? Now an ETF, or exchange-traded fund, is totally different. A spot Bitcoin ETF, for example, actually holds the real Bitcoin in custody. The fund's assets are legally separate from the issuer's balance sheet. So if the fund manager went bankrupt tomorrow, your Bitcoin will still be safe because it belongs to the fund's investors, not the company. This separation, called asset segregation, is a huge deal for investor protection. ETNs have counterparty risk, while ETFs are designed to protect you from that. This fundamental difference is exactly why tax authorities treat them so differently. Let's talk Germany. They draw a super clear line here. Crypto ETNs are seen as financial instruments, specifically debt securities. They fall under Kapitalertragssteuer, which is capital income tax, at a flat rate of 25%. Add in the solidarity surcharge and maybe church tax, and you're looking at an effective rate of around 26.375%. This applies to gains and any income. And here's the kicker. ETNs don't get the Teilfreistellung or partial exemption because that's only for investment funds. Ouch. On the other hand, are treated as investment funds in Germany. They have this thing called Vorabpauschale, which is a notional prepayment of tax on deemed income, calculated annually. Equity ETFs get a 30% Teilfreistellung, meaning 30% of gains and the Vorabpauschale are tax exempt. Mixed funds get 15%. Crypto ETFs might not even qualify for this partial exemption, since crypto isn't considered equity in the traditional sense. So for German investors, ETNs are simpler but no exemptions. ETFs are complex with that annual Vorabpauschale reporting, but they might offer tax advantages for long-term holders in certain fund categories. Make sense? Now let's hop over to France and the UK. In France, they apply their prélèvement forfaitaire unique, or flat tax, to both ETNs and ETFs at a 30% rate. This includes 12.8% income tax and 17.2% social charges. So at first glance, it looks the same, right? But here's the catch. The difference is in the reporting category. ETN income in France is classified as interest income, reported under the debt instrument category. ETF capital gains follow a different declaration pathway, as gains from selling fund units. While the tax rate might be the same under the flat tax, if you opt for the progressive income tax scale, these two products behave very differently. ETF gains follow capital gains rules, but ETN gains are treated as interest. It's all about the details. Navigating these complex tax rules across different European countries, especially with new investment vehicles like crypto ETNs and ETFs, can be a real headache. That's where tools like dTax come in. We support 18 different blockchains, including 16 EVM chains like Ethereum and Polygon, plus Solana and Bitcoin. We can also handle 8 different cost basis methods like FIFO or HIFO to help you minimize your tax liability. And guess what? Our free tier lets you track up to 50 transactions and use our AI chat 5 times a day. Check out getdtx.com. It's open source and free to start. So whether you're investing in crypto ETNs or ETFs, remember that the structural differences are key to understanding your tax obligations in Europe. Always know how your specific investments are classified in your country. It can save you a ton of money and headaches. If you found this helpful, hit that like button, subscribe for more crypto tax insights, and let us know in the comments what other tax topics you want us to cover. Thanks for watching, and we'll see you in the next one.